Hello, ladies and gentlemen. Welcome to yet another episode of Bitcoin Summer. I'm your host, Brian Cameron. Have a ton to get to today, so let's jump right into it. First off, we're going to be taking a look at the Bitcoin Summer portfolio. I've allocated the rest of my cash position that I was saving for a rainy day. Today might have been that rainy day, December 17th, 2021. We'll see, and we'll check all of those things out later on in the show. My main allocation is an option strategy of writing covered calls. So we're going to be talking about options today. Puts, calls, and of course covered calls, which has to do with a portfolio. Now, there's a ton of other strategies that you can do with options, risk management, certain things that you can do. But today we're just going to focus on the basics because that pertains to the portfolio. So as well as that, we're going to be talking about the aftermath of what happened with the FOMC meeting earlier on in the week and a little bit of weakness in the market and some other fresh news items in the Bitcoin world, as we always do. And also, and I meant to tease this on the last episode, but I will be releasing a tutorial on setting up a cold card wallet with your node. And I've been really excited. I got a couple of these for Christmas gifts. And I picked myself up one too, picked one up for the show. So I will be setting up on my Umbral node, I will be setting up the cold card. And so I'm going to be combining the open source security of the best hardware wallet on the market, for sure, hands down, with your own verification system. So this is an easy way for you to take control of your money. We need to get our coins off of the exchanges, obviously, and into your own possession. And you can truly own your own Bitcoin. So I'm going to walk through all of that. So that video is coming up. So, do all the things, hit subscribe so you're not going to miss that video. Now, we have Christmas coming up. We have New Year's coming up. The holidays are a time to enjoy. So don't be stressed about the Fed. They know not what they do. Bitcoin is mooning in Turkey. We'll talk about that. And why this is the actual signal for Bitcoin and not this weak price movement in the United States. So please, relax this holiday season. Hug and laugh with your family. Enjoy some crackling Yule logs on the fire. And do all of the things. Get off of the computer. Go enjoy your life. Make sure you smash that like button, subscribe to the show. Don't miss out on all the great information coming up on Bitcoin, investing, broader macro picture. I've been throwing that into the mix lately as well. Check out in the show notes for any further details. And come on, guys. Come out from the cold. In here, it's always Bitcoin Summer. They price this out of the housing market. They price this out of the education market. They price this out of the stock market. They continue to price this out of day-to-day goods. We need to take this back. And this is our time to do it. As I mentioned at the top, I have allocated my entire cash balance into assets. So now it's just time for me to relax over the holidays. So I'm kind of freed of some choices. And I'm going to just let the market do what it does. And that's kind of the best approach to take anyway. And running this portfolio has kind of taught me how much I miss just buying and holding Bitcoin. It's so easy. It's so stress-free. It's a way to opt out of the system. It's a way to opt out of cash, the US dollar. And this trading business it's on my mind a lot. And it's been exciting. It's been really fun, don't get me wrong. But I'm going to just enjoy myself for the next couple weeks because we can't change what's going to happen to the market. We can only use the information that we have to make decisions about our portfolios in the present. So this feels a lot better to me and a lot more natural to me to have everything allocated and just sit and wait. So I'm really, really excited about that. And as you can see here on the portfolio, I actually have a negative cash balance. you may be asking, how is that possible? I got negative $441. What's going on here? Well, I had mentioned when I introduced the portfolio that I do have some reserves, and at any point I might inject that into the portfolio if the opportunity arises. And the opportunity definitely arose today, and I went a little bit above my cash balance in there. So later on, I might donate that cash to the portfolio or take it out. But if I do donate it to the portfolio, that will come up on the initial funding. So I won't be cheating and saying, I added more cash and I made my goal for 2022, my $40,000 goal. So let's just find out what happens. And if I need to donate more cash to the system, I might do that as well. But, this is a super important point. My cash goals over the next coming months, I have plotted out here, and right now it's negative 3%, and I did have a goal of 0% up until December 31st, as I believe that we are going to hit another run into all-time highs possibly within the next month or two here. So I want to be zero cash because I want that cash to be on the train upwards. And as you can see, scaling down up until June, July of 2022, because there are going to be some headwinds from the Fed if they are going to actually be raising these interest rates. Now, our inflation is right around 7% right now. We could be topping out and seeing some weakness in those inflation numbers. Who knows? They could be rising more, but Preston Pish and others have been mentioning this week, we might be seeing a top out of those figures. So I tend to agree with him usually, and I think he may be possibly right. 6.8 is a high inflation print, especially for the CPI numbers, which are super baked, super cooked books. They are not the appropriate numbers. And either way, with this portfolio, I want to make as much as I can right now, leading up to those months when we might see some weakness in the market created by the Fed, even more than we've seen in the last couple weeks here, and to get back to a higher cash position, potentially by 50% by July 31st, maybe even more than that, depending on how these investments move. But that's just the goal. That's just a general guideline, because what you want to do before your bias starts coming into play, you want to have these rules set up. And this goes with if you just have an investment portfolio too. You should have a certain goal in mind and stick to those rules as closely as you can. And yes, I don't know if these investments are going to play out and I'll be able to get to a 50% cash position. But that is just the idea that I want to stick with, because what portfolio management is a management of risk. And it's the most important aspect of portfolio management. And basically what I mean by risk management is managing your cash balance. At any time, the value of your portfolio isn't in cash, it's put at risk. Does that make sense? So that's what I mean by risk management. And speaking of risk, why am I going with, you may say, hey, I got a little bit of Bitcoin in this portfolio, but why don't I just have all of Bitcoin in the portfolio? Well, I covered this a little bit earlier, and it goes a little bit deeper than what I've said, so I wanted to touch on that before we jump into options. First off, I don't want to sell Bitcoin, so cash flow wise, it's going to be tough for me because I made these purchases of Bitcoin. These are going straight into cold storage on my cold card potentially. But I don't want to sell that, so I'm going to have to find that cash when I do go up and sell those positions, sell them. Those go into cold storage. I'm going to have to come up with that cash somewhere. So I don't have a problem with selling any other asset. So I have these proxy assets, and one of them is Hut 8, which is a Bitcoin mining company. And not only do I like where the price is at right now, which is just under $8 it hit today, which is just an insanely cheap price. It hasn't been that since the lows of the summer, which Bitcoin was at right around $30,000. And Bitcoin is at almost $50,000, and it's right around that same price level. So what you have here with a miner, and this same goes for gold miners. When I was first buying gold, I wasn't buying gold. I was buying gold miners because you leverage. When the price of gold moves up, the price of the miners go up exponentially. Not just if Bitcoin goes up 5% in a day, HUT 8 won't go up just 5%. It's going to go up 8 or 10. And I did the calculation somewhere, and I think it's something like 1.5 times or something like that. Almost twice as much. So right around that, if Bitcoin went up 5%, HUT 8 would go up 7.5 to 10%. So that's why I like it, because I don't have a ton of money to play with, so I need to leverage my cash position, and that's why I chose miners. So where did I place the rest of the portfolio money? As you can see at the bottom here, I bought yet another HUT call. You're like, why did you get another HUT call? You got slaughtered on these. You're going to get slaughtered on these ones that expire December 31st, potentially. Well, what I did with this one was I got the expiration date out to 2023. This is called LEAPS. LEAPS option contract is something that goes beyond a year. And this is an amazing strategy because you can get the upside from a call option and a leverage. You can leverage your position. You can get a huge gain on a small amount of money because you're only paying the premium. And then you're getting all the upside from that stock, from that premium. Now, your downside risk is 100%. We'll go over this on the options portion of the show in a little bit. But since I was getting slaughtered on these other options calls, I saw this opportunity to get an $8 call for January 2023. I took it. We'll see how it plays out. I think it was a good move. I will have the option to buy 100 shares of HUT 8 for $8 in 2023. If HUT 8 is trading for $15 or $16 or $17 in 2023, I can still buy it for $8. So that's the cool part about options. And it was a risky play, but I took a little bit of the risk out by putting it out to 2023. So I will sell it much before that if it makes a good run. I have about 100% target on that. So I bought it at $4.80 premium, and I'm looking for right around a $9.60 before I sell. So the rest of the entire portfolio went into my HUT shares that I've been buying on margin, and that makes up 77% of the portfolio. Now, the special thing about this allocation, it's not just a buy low, sell high strategy. Like I just mentioned, it's on margin, which brings about more risk. You can get a margin call. You'll have to insert more cash in that case. Or sometimes if you don't respond right away, they'll literally just sell your shares for you. And you can really get liquidated that way. But also, it can dramatically boost your returns. And this is the reason why I wanted to do that is so it would catapult me to this 154% yearly goal that I have. So that's one of the reasons why I used margin. And the second reason why I used these different strategies with these shares, because this stock could double easily within the next couple months. But with my portfolio goals in mind, I can't just double. It's not going to work. I'm not going to make my goal. So what I'm going to do on top of the margin is selling or writing covered calls on this position. And that'll help me manage the risk as well. So it's going to boost returns and manage risk at the same time. So I'm going to show you how that goes in a little when we get to the options section. Before we hop into that, though, a brief word on allocation. Now, imagine if I had put the entire right around $16,000 right into HUT 8 right away. What if I bought all of the HUT shares I could with the 16,000? It would have been really, really, really awesome if Bitcoin mooned to $120,000 instantly. But look what happened. It didn't. When I started this portfolio, Bitcoin was above $60,000. And it's hovering at right around $46,000, $47,000 today. But I was able to lower my cost basis because I didn't go all in right at once. This is called tranche buying. And you separate your allocations into different tranches. And what I like to do is do a little tranche at first and dip your toes in. And then you hit a certain other point, and then you do a little bit larger of a position. And then you hit another point and a little bit larger. And that's what I've done with these HUT shares. My cost basis went from, it was literally $12 per share to $8.56 shares that I hold right now, 1,400 shares. It's such an important lesson that I've learned through my long journey of investing, but I learned it the hard way, and I want you all to take it from me and do not jump all the way in on an investment idea. Always leave a little bit behind, because if your investment idea drops right away, you're just going to be heartbroken. And you're going to start doing things in panic mode. Sometimes what happens when you dip your toes in, you wish for it to fall. You never do that when you go all in. So it is for a little bit of peace of mind as well. And yeah, I could have waited all the way down. It got to $7.50 today. I could have just purchased all of it at $7.50. But I didn't know that it was going to go from 12 to $7.50. So I took a little bit of that uncertainty on the top side of it as well. Because if I would have bought it at 12 and it immediately went back up to 16, which it was at for the better part of quarter 3 and quarter 4, I would have been just fine with just that little allocation. But it went down and down and down. So that made that investment better and better. So just an important point before we get into options. So let's talk about options now. Now, options are a contract. Simple as that. An option is just a contract. One contract equals 100 shares of a stock. It represents the right, not the obligation, to buy those 100 shares at a certain price, and that's called the strike price. It also has a time limit. This is what I was talking about, a ticking time bomb of options. It lands on Fridays, and that's called the expiry or expiration date. In the United States, options can be exercised at any time before the expiration date. But most options are either closed or expire worthless. Usually they aren't exercised, is the point. So let's go through the example the example of the portfolio here of something that is about to expire worthless. I bought this call for $12.50. That's a strike price. Expiry date is December 23rd, 2021. And the premium was $2. So you do $2 times, and there's 100 shares in the contract. So I paid $200 for this option contract. So if by next Friday, because that's December 23rd, the price of HUT is less than $12.50, this option contract will be worth $0. So the downside is 100%. That's tremendous risk. But with risk sometimes comes great reward. And the rewards can be hundreds of percents. And here's why. There's two value metrics that determine the premium of an option. And the two factors are time value and intrinsic value. Now, the time value is, now the longer out to the expiry date, the more value that option has. This is why most options don't make it to the expiration date, is because people are cashing in on that time value. It adds it right on top of that premium. And if your option, if the underlying stock, this is why they call them derivatives, it's a derivative of the stock. Now, if the underlying stock ramps up right away, but you hold on to it till the expiration date, you lose all of that time value. But if you cash it in, the earlier you cash it in, the more of that time value you get added onto your premium that you sell it for. So that's just an interesting little feature for options that a lot of people don't realize. Now, the intrinsic value is the actual value of the options if exercised. So let's say on the expiration date, because the time value is 0. So let's say HUT is $13 by next Friday. That sounds great. It's a $12.50 call. I have the right to buy 100 shares at $12.50. So that's 50-cent profit, $13 minus $12.50, times 100 shares. The intrinsic value is $50. But we paid $200 for that option. So yeah, it sounded great because it didn't expire at 0, but you lost $150. So this is where the break-even calculation comes in. You got the premium plus the strike price. So that's the $12.50 plus the $2 premium, $14.50 is the break-even price. You have to get over that $14.50 by expiration date. Now, you don't need to be at that $14.50 to make a profit on options because of the time value. It's all about time. So options, puts, and calls, they're a ticking time bomb. The puts and the calls, and puts are just the same thing as calls, except for it's the right to sell those shares, those underlying shares. So you're shorting the underlying stock. And when the stock moves down, you actually make profit. So that's just the difference between calls and puts. Exact same mechanism, but they're just opposite directions. So there's a ton of different, like I mentioned at the beginning of the show, there's a ton of different strategies, and mostly are risk strategies. They're risk mitigation strategies. Usually, big time hedge funders and things like that, they don't deal a lot with buying just straight up call options. Usually they're doing things like protective puts, and it's mainly it's an insurance contract is basically what it is. You're paying the premium and you're getting the protection. Now, this is what's going to lead us into my main strategy of this portfolio, at least right now, is writing covered calls. And it's the cornerstone of the Bitcoin Summer portfolio strategy. I wanted to get on the other side of the call option market. I was a buyer, and I have now turned myself into a seller. So I bought shares 100 at a time as the price was moving from 12 to 750. I'm up to 1,400 shares. So I can sell 14 contracts. And I can collect that premium instead of paying it. And it's literally like owning a piece of real estate or like a high-paying dividend stock. You literally just pocket the income. And the beauty of it is if you do it either out of the money enough or if you do it right at the top and the price starts dropping of HUT, you're taking that risk out of you holding on to that stock any longer, and you're guaranteeing that sale price. But the only way that I can hang on to those shares is if it expires out of the money. So I sell the $16 calls, and by the end of the 3 months, it's at the price of HUT is $15.50 or $15.99 even. Those expire $0. I still get to keep the $5,600. The person who bought them from me, it expires worthless. It's a zero-sum game. I'm the winner. They're the loser. I've been on the other side of that, so I don't, this is a free and open market, and we're all just playing odds here. What they're trying to do is leverage it up. They think it's going to run up even more. I'm front-running all of that movement right now. So this is the beauty of writing covered calls, because there is the potential there that I could let this run and hang on to my 1,400 shares throughout the whole rest of the year and earn, $5,600 every couple months, every 3 months or every 4 months. And it's the gift that keeps on giving. And I only spent let's take a look at it right now. I didn't even spend $8,500 on it. So the total cost of it was right around upwards of close to $12,000, but I used $3,500 worth of margin. So if I've only put in $8,400 of my own money. So this will leverage on leverage on leverage that I was talking about earlier. And so 1,400 shares, cost base is $856. So let's say an expiration goal of 120 days. The price at the time of the sale, $1,450. So the organic profit and loss would be 69%. Pretty good return that would be if I were to just buy those shares. This is another thing about call options too, before we move on. Now you want the VIX, which is the volatility index. You want that to be higher than normal, because that's another piece to the valuation of a call option. Is the higher the VIX, the higher the volatility, higher the premiums for call options, because it's dialing in there the movement of that underlying stock price. So I'm going to aim for a VIX position around 1950 at a minimum. Now, it's been fluctuating. It's been above 20 for a little bit, just because we've been in these, these times of turmoil. But it's been kind of averaging like 16 or so throughout the year. But if I can sell at a sort of, a relatively high VIX, that's a really, really good way to sell your call options. The only problem with that is the underlying stock could fall on that same day that the VIX is high, because usually that's what happens. The VIX goes high, the stock market goes low. That's usually what happens. But a day that the VIX goes high and HUT deviates from the market, that would be an amazing time to sell these call options. So like I said, the income would be $5,600. Scenario one is if the calls were in the money and that person could call that option. Now, they would buy the shares. The value at the time of sale, of the time of expiry, would be $20,300. An income from the premiums of $5,600. So that's our entire proceeds. And then the after the margin, because you got to pay your margin back, I would have $22,365. Now that's a profit of almost $14,000, a return of 165%. Now you see it's really boosted that 69%. And an annualized return of 1,756, which would far outpace the 156% that I'm trying to do for the year. Now let's say scenario 2, it expires below the strike price. This is kind of the ideal scenario, because you can just keep your shares and just let it roll, and you can keep earning that income. So as you can see here, we could get to our second sale and still earn 1,890% year over year, or 171%, and you're still hanging on to those shares. As those shares ramp up in value, and you can keep ticking up your strike price that you're selling those calls at. So I'm excited about this. It's an amazing opportunity. I'm so glad I got the price that I got. And we'll just see, like I said, I'm just going to let now the market take hold. And I don't have any more choices to make with this portfolio, because I'm now all in, and I waited long enough I'm thinking we could still drop to this $42,000 level. So let's take a look right now where we're at with the markets. Um, I'm I'm honestly, so I drew this channel 2 whole weeks ago upon the first initial drop. See that wick down to 42,000. That's why I think we could potentially end up there, and it would be well within this channel. And it's been at the bottom little half of this channel, and that's what's making me kind of in this place where it's like, okay, we're gonna see some chop for a little bit. At any point, we don't know what Bitcoin's gonna do. At any point, this thing could run up. We have no idea. I went over this a little bit earlier on in the week about previous FOMC meetings this year, and as you can see, 41 days, 37%. 29 days, 69%. 8 days, 14%. And that last one was a huge fake out. It went up 14% in 8 days. And now we're at where we're at right now. It went up to 69,000. Now we're at 46,300. So I mapped this out for the last 3 times and what it would mean for the price. And yeah, we didn't go, straight up parabolically, but it has wicked down on a couple of these previous ones. And that's not even out of the ordinary that it's wicked down after these FOMC meetings. I think we took a little bit of risk out of this market myself, because now we know that they're not going to surprise raise rates. We already knew those rates were going to come. They're going to be weak rate hikes, and we'll just see where it takes us. But, it de-risked it a little bit in my book. So if it were another fake out and we're going to be dropping again by, December 20, by next Friday, let's say, we might see 54,000. That could be a potential for sure. Now, everyone's been talking about this $53,000 level. Will Clemente has been chiming on about it. And I do agree with him. It would signify that we're back in the race. We're back in the bull run, and we're going to not see a ton more weakness going into Q1 2022. Like I said, everything in Bitcoin is unknown, and this thing does what it wants to do. If there's more buyers than sellers in the market, the price goes up. If there's more sellers, it goes down. It's that simple. And we don't know on any given day if there's going to be more buyers or sellers. What I know right now is that there's not a ton of buyers. There are a lot of buyers on the over-the-counter markets, which are large corporations and hedge funds. They don't buy on the open market because that would spook the price up too much. The liquidity is so low right now on exchanges. People are just yanking coins off of exchanges, which is a good thing. But this can go in the opposite direction as well. And that's the reason why we've seen this. And traders have been in the driver's seat, which is the reason why I keep pulling up these charts. You got to take charts with a grain of salt. But when the traders are in the driver's seat, you got to take a look at what they're looking at and kind of make your trades based on that. Because I think we're in a secular bull market with Bitcoin right now. It's just inevitable. We may see a little bit more chop, a little bit more weakness, a little bit more sideways. But I just believe the general trajectory of Bitcoin is up and to the right. So, but if we do hit this 53 level and it's with gusto, I think we blast much past that. If we get rejected off of there, I think we could probably wick down to 42 again, possibly by the end of the year. We just don't know. We don't know what kind of news is coming out. I think risk will be back on in January, and I think hedge funds and large money is going to be allocating Bitcoin because they see another potential of 50% gains, 100% gains, and they want to lock that in right away at the beginning of the year, and they can sell in February, March, and be good for the rest of the year. And that's kind of my thinking as a trader. That's kind of where my head's at of where these risk managers are going to be Q1 2022. So I think if we blow through that, we could see potentially, and this is what the first run of the year from the FOMC meeting went up to 64,000 in 41 days, and that could be by the end of January. So we could see close to all-time highs by next January. But the big one was 29 days. That would bring us to right around January 12th. That would be a 69% gain, and we could see right around 79,000, 80,000. If it's going to follow these old patterns, as we know, it doesn't do that usually. It's just fun to look at this because if we de-risked, what did it do in the past? And it's done it 3 times in a row. We've seen strength, sometimes a fake out, sometimes not, and we'll see a rip. But I think we've taken a lot of risk out, and we'll just see where it goes. I got my popcorn. I'm going to be checking it out for sure. So this dropped today, kind of crazy. The Grayscale GBTC ETF application, convert the trust into a ETF. The SEC delays the decision until February 2022. Now, I had guessed that right around this time, we would be seeing an approval for the conversion. I was wrong, apparently, but they have been hands down declining these from other companies. And the fact that they are pushing this out, they're delaying the decision till February, I think it's a good sign. Now, people are thinking it's going to be Lucy with the football, and they're going to pull it away again at the last second. But I've been screaming all along, no, it doesn't matter. No other ETFs are going to get approved before GBTC. There's too much money in there. There's too much. They would not do that. They don't know what they're doing really right now. They're being reckless by having this futures Frankenstein product on the market right now. But I don't think they would endanger. It would be so obvious that they would be endangering investors at that point. And I just don't think it's going to happen. So anyways, now a lot of people were thinking, if not December, possibly July, we could see a decision. Now, I think this is signaling possibly February, but we'll see where they're at too, because they might not want Bitcoin's price to take off. They might be suppressing it on that end of it too, because they're a little bit nervous about what's going on with the price of Bitcoin and the adoption of Bitcoin right now, because it's looking kind of scary from their angle, and I get that. So this one caught my eye too. This is going to be, I've been chiming on about this on the show, Bitcoin-backed mortgages. So Ledden, it's a company, they do lending. They are going to be launching a Bitcoin-backed mortgage program, and I signed up for the informational emails, and they're going to contact me with more information, and I will convey that to you all as well, and what the terms might be and things like that. But this is so cool, because when you go into a bank, and if you're going to be trying to buy a house for your family or whatever you're going to be doing, you can't go show them your Bitcoin and say, hey, can you take this as collateral? It doesn't work that way. They'll look at your brokerage account. I promised you that, but they definitely will not look at your Bitcoin. So this is just going to be another alternative to skip over the traditional finance system, and I am here for it for sure. And to close out, I just want everyone to know, just from the bottom of my heart, thank you for watching the show, listening. And you may think I'm just this crazy bull, a consummate bull all the time. Just, it's never going to go down. I'm so positive about the price all the time. And, why don't you give it to us straight? I'm giving it to you as straight as possible, as I possibly can. These short-term price movements, to me, don't matter much. What matters is underlying fundamentals and value. And to me, the value of Bitcoin is way higher than where it's at right now. So I would buy hand over fist. I would do it over and over and over again, even if the price kept dropping. I am that confident about the value. And miners like my Hut 8 agree with me. Now look at this. The number of mined Bitcoin transferred to exchanges to sell, essentially, it decreased by 61% on the year. They're only putting on 134 Bitcoin per day. And basically, Michael Saylor's been eating all of those. So, I mean, it's just a wash, I heard somewhere that the dollar cost averagers, on the Strike app are taking away this liquidity right away. So, this is why I remain bullish. The balances on exchanges are dwindling. The miners are not selling. They are not capitulating. The price is not where the market is pointing to right now. And yes, we might have to wait 3 more months. And we might have to wait 6 more months, or a year, or 3, or 5. But I am patient. And you should be too. And then go enjoy your family for the holidays. And please, please, please get in touch with me if you have any questions, comments, concerns about the show. And I will see you guys on the other end. Have a great Christmas. Be looking out for that cold card video. And I will see you guys next time.